I think there's a lot more to say about it. I mean, I think it's just removed the risk, the apparent risk right now. But we know that, especially with Greece, I mean, the banks are in shambles. It's going to require recapitalizations. With Greece, perhaps there's going to be 2 deals, not 1 deal. At the end of the day, I think it's the removal of the apparent risk that helped the market just go forward as it has the last 3 days or 4 days. But other than that, I think when you dig deep, you realize there's a lot more work to be done.
If we shift sort of focus away from those oil prices, the story on Greece's resolution, I suppose, is still helping to power stocks ahead. We saw those markets performing strongly today. If we do remove the issue from the forefront of the macro picture, obviously seeing the calming of Chinese equities as well, what does the landscape of risks look like over the next few weeks?
I think the landscape is really barren, and that's the problem. When you combine that with a very, very gloomy sentiment here in the U.S., with an earnings season where the bar is set so low, I do think like the short-term risk is to the upside like we've seen. However, I'd like to say that longer term or even intermediate term, I think we're overestimating or being a lot more complacent than we should be with regards to the Fed. So I do see the S&P 500 tracking near its high about 2130, which is about 28 points from here. But beyond that, I think it's going to be a long road to hoe.
I suppose we haven't seen too much change on the Greece situation since Monday. The next event, I guess, will be getting those tough austerity measures through Parliament on Wednesday. The big question, I suppose, is whether these will in fact pass the Greece vote.
Yeah, I mean, that's just it. I mean, will they be able to pass it? I mean, they're insisting that the Greek parliament does so. But, you know, beneath all of it, we have to realize that the Greece GDP is about 2.5% of the Eurozone, not really that big. 80% of the risk has been taken away of foreign bondholders and banks. And really, like I said last week, a lot of this is just showmanship to keep other countries from doing the same.
How quickly do you think the Fed could become an issue again? I mean, we speak about Greece and China and all of the turmoil that's going on, you know, around the world. But how quickly could the Fed come back into the headlines again, particularly with Janet Yellen testifying over the next 2 days or so, starting off tomorrow?
Yeah, you know, that's an interesting question. Hard to answer. I think the thing is, like when it comes to China, when it comes to Greece, the news has been out. We've wrestled with this for a long time. And so for anything else to come out, it wouldn't be as shocking. The shock value wouldn't be as big as it once was or once were. So it would have to be something very, very big. In China, we have to admit that the Shanghai Composite went from 3,200 to 5,000 in a period of 5 months with really no news other than more liquidity into the market. So having a downdraft like it did, it wasn't really economic related. It was just more buyers left the building and the market just did what it does.
Larry, Brian Parker from Sun Super. You mentioned that markets are being a bit too complacent about the Fed at this point. A, what's your outlook for the funds rate from here? And is that concern of yours largely driven by a view that we're underestimating inflation risks, or do you think the Fed is going to have to, if the Fed is behind the curve on the inflation side of things?
Yeah, you know, it's a great question. I don't think it's really inflation per se, although I could be wrong about that. I've been wrong about the Fed all year. I do think they're going to raise rates 25 basis points in September, and pardon me, and I think it's going to be nothing other than a symbolic rate hike. And they'll just be watching the data very carefully from that point. I don't think necessarily inflation related. We're seeing the jobs picture getting a lot closer to the target, however you want to decipher that. But at the end of the day, our economy is healthy enough to withstand a 25 basis point rate hike. So I think that's the bottom line. And looking at the Fed futures today, they've discounted the odds of a rate hike in September down to 21%. Down to 36% in October. So the odds of what I'm saying are decreasing every trading day. But I'm going to stand firm believing that they will raise rates.
Larry, speaking of rates, today we saw that disappointing retail sales data actually badly missing those expectations. How much do you think this is likely to weigh on the timing of the Fed's next move?
I don't think it's going to weigh on the Fed's move at all. I mean, it's just one number. I don't think it's changed the Fed narrative whatsoever. That said, if we get industrial production come out poorly, GDP on Friday poorly, perhaps. But I still think overall the economy has shown enough strength to withstand a rate hike, and I don't think the Fed's going to waver and wait until next year.
Today, I wanted to ask you also about the release of some of those bank results, really kicking off earnings season, I suppose. There are some expectations that we could see overall earnings falling by close to 5%. In your mind, what are you expecting, and what in particular are investors looking out for this earnings season?
Yeah, I'm looking through the nitty-gritty of the bank earnings. We know that in the second quarter, banks took off. Net interest margins so far have been good. We'll find out more tomorrow with Bank of America and PNC. The housing market continues its recovery, very, very crunchy, but is recovering. And loan growth continues to be decent, not great, but decent. And I know that Wells Fargo disappointed today. JP Morgan did great or did good, offsetting one another. But in aggregate, I do think that banks continue to be a good place to put your money.
What do you think could be the biggest wild card for the industry this season?
The biggest wild card for this weekend?
For earnings season, for the industry's over earnings season.
I'm sorry. I think that, the bar is set so low. So I think the biggest wild card is if, especially on the revenue side, if revenues don't go beyond estimates by enough of a margin. I mean, right now the bar is set very low, not keeping in mind that the dollar has stabilized, oil has stabilized, and if revenues don't outperform more than analysts predict, I think that would be the wild card and would just send the market into a free fall.
Fantastic, Larry. On that note, we will leave it there. Thank you so much for joining us.